Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problem on general insurance companies. Last video I have completed 5 short problems on general insurance companies. Before that I have given one complete video regarding the explanation of general insurance companies, differences between general insurance and life insurance, and what are the provisions of making the financial statements of general insurance companies. All these things I have explained in the last 2 videos. If you have watched that, then definitely you can be able to enjoy the remaining problems. Otherwise, every problem will be a peculiar one to you. So I suggest you to go to the playlist of my channel, select the subject corporate accounting, select the topic general insurance companies, watch the first, second video. Definitely you will get the complete concept clarity regarding the terms which are used in general insurance companies and also the provisions, how to make the revenue account, profit and loss account and balance sheet of general insurance companies. Now I'm going to start the main problem. First main problem I'm going to start now. But before that, I expect my viewers to have a printout of the problems which I have given in the link under my description. So before watching the video, take a printout and keep it ready. Now I'm going to start first problem. From the following, prepare fire revenue account for the year ended 31st March 2004. Rupees in thousands. Claims paid. Claims paid will come in schedule number 2. Claims incurred. Claims incurred. In this schedule, we'll take claims paid. Legal expenses regarding claims. So these legal expenses will be added to claims. Premium received, first schedule. Then reinsurance premium. Reinsurance premium will be deducted from premium. Then commission. Commission will be taken in schedule number 3, third schedule. Then expenses of management, schedule number 4, operating expenses. Then provision against unexpired risk on 1/4/2003. Actually, we are preparing the financial statements on 31st March 2004. So at the beginning of the year, 1st April 2003, the reserve for unexpired risk is 2,60,000. 2,60,000 is the reserve for unexpired risk at the beginning of the year. Claims unpaid on 1/4/2003 and claims unpaid on 31st March 2004. Unpaid means outstanding, due but not paid. So outstanding at the end of the year will be added, outstanding at the beginning of the year will be deducted. We have already done this in the last video also. Then reserve 50% of net premium for unexpired risk. See here, according to IRDA, Insurance Regulatory and Development Authority of India, which controls all the insurance business in India, which regulates the insurance business, they have fixed 50% of net premium of the current year should be transferred to reserve for unexpired risk every year. So in this problem, it is specifically given. Even if it is not specifically given, we should provide 50% of net premium to reserve for unexpired risk in case of fire insurance. That's all. So these are the provisions. Now I'm showing you the complete solution of this problem. So fire revenue account for the year ended 31st March 2004. Thousands omitted. Here we should write down rupees in thousands. Rupees in thousands. Then particulars, schedule number, then amount. Premium earned. Premium earned, schedule number 1. Now you can see here, schedules forming part of financial statements. Schedule number 1, premium earned. Premium received is given in the problem. From premium received, deduct reinsurance premium. Reinsurance premium deducted. So 6 lakh minus 60,000, it is 5,40,000. 5,40,000 is called net premium. And last sentence, it is given that 50% of net premium should be transferred to reserve for unexpired risk. So unexpired risk adjustment. Unexpired risk adjustment. Now end of the year, 50% of 5,40,000, net premium 5,40,000, 50% of 5,40,000, 2,70,000, and beginning of the year 2,60,000 given in the problem. Now how much increased? Beginning of the year it was 2,60,000, end of the year it is 2,70,000. So how much reserve have increased? 10,000. That 10,000 you take it in the outer column, not deduct. 540 minus 10, 5,30,000 is called premium earned. And this premium earned you have taken here. That's it. First part completed, A part completed, income part over. Now claims incurred, second schedule. Now you can see schedule number 2, claims incurred. Claims paid is given in the problem, including legal expenses. Claims paid including legal expenses. Actually separately it is given. Claims paid are 2,35,000 and legal expenses are 5,000. So 2,35,000 plus 5,000, 2,40,000. So here 2,40,000 claims paid including legal expense. Add outstanding claim at the end of the year minus outstanding claim at the beginning of the year. Then we get claims incurred, 2,55,000. Or now commission. Schedule number 3, commission paid. No adjustments given in this problem. Directly we'll take 1 lakh. Operating expenses, no adjustments are there. Directly management expenses. Expenses of management, 1,50,000. Taken. Now take the total of B. B is the total of expenditure. A is the total of revenue. So revenue is 5,30,000. Expenditure is 5,05,000. So 530 minus 5,05,000. 25,000 rupees is the operating profit. A minus B. A minus B is the operating profit, 25,000. That's all. This is the first main problem on general insurance. Now I am reading out the second problem. See the second one. On 31st March 2004, the books of Good Luck Insurance Company Limited contain the following particulars in respect of fire insurance. Rupees in thousands. A reserve for unexpired risk on 1/4/2003. Beginning of the year, the reserve is 5 lakh. Additional reserve. Previous problem, additional reserve was not there. It is optional. Whereas this reserve for unexpired risk is the statutory reserve, compulsory. Additional reserve is optional. It depends on the company. They may keep or they may not keep. So additional reserve on 1/4/2003, 1 lakh. So total reserve at the beginning of the year, 6 lakh, 5 lakh plus 1 lakh. Now reinsurance premium. Reinsurance premium will be deducted from premium just like the previous problem. Reinsurance recoveries. Reinsurance recoveries means claims covered under reinsurance. The meaning of reinsurance recoveries means claims covered under reinsurance. It will be deducted from claims. It will be deducted from claims in schedule number 2. Then premium, first schedule. Estimated liability in respect of outstanding claims. The outstanding claim beginning of the year 65,000, end of the year 90,000. As usual, just like the previous problem, outstanding claim end of the year will be added. Outstanding claim beginning of the year will be deducted. Expenses of management. Expenses of management will be taken in operating expenses, schedule number 4. But here 2,80,000 is the total expense of management. In bracket it is given including 30,000 legal expenses paid in connection with claims. That means in this 2,80,000, 30,000 rupees are included. And this 30,000 are the legal expenses regarding claims. So what we should do? 30,000 we add to claims. 30,000 rupees we add up to claims paid, and that 30,000 rupees will be deducted from 2,80,000. 2,80,000 minus 30,000, 2,50,000 only we are going to take expenses of management. Then interest, interest and dividend. These are the other income. Interest and dividend is the income on investment. That will take it here. You can see here. Good Luck Insurance Company Limited fire revenue account for the year ended. Particulars, schedule number, amount, rupees in thousands. Premium earned, I'll tell you. Profit on sale of investment, interest, dividend, gross. Previous problem, these other incomes are not there. Only premium was given. But here, along with premium, we are having income from investment and also other income. So interest and dividend 65,000. So interest, dividend, etc. 65,000. Income tax on above. This income tax will not be taken in revenue account. Income tax on this interest and dividend, that will go to balance sheet. Current assets, 12th schedule. Then profit on sale of investment, we should take it here. Profit on sale of investment, 11,000. There is no schedule for these two items. Commission, schedule number 3. Commission, schedule number 3. Then claims paid, schedule number 2. Next, prepare the fire insurance revenue account for the year ended 31st March, reserving 50% of premium for an expired risk, keeping an additional reserve of 1 lakh. So 1 lakh rupees additional reserve compulsorily we should keep. Apart from that, 50%. 50% of net premium of current year will be transferred to reserve. It's very easy problem. See carefully. Premium earned, first schedule. So schedules forming part of financial statements. Schedule number 1, premium earned. Premium received is given 11,20,000. Directly given in the problem. From that deduct reinsurance premium. Just like the previous problem. Reinsurance premium deducted. 10,45,000 is the net premium of the current year. From this, we make the adjustment for changes in the reserve for unexpired risk. Adjustment for changes in the reserve for unexpired risk. Adjustment for unexpired risk. End of the year. At the end of the year, we should transfer 50% of net premium. So 10,45,000 into 50%, you'll get 5,22,500. Plus, it is asking you to keep 1 lakh rupees additional reserve also. So I am keeping 1 lakh. So 5,22,500 plus 1 lakh, 6,22,500 is the reserve for an expired risk at the end of the year. From this, we deduct the reserve at the beginning of the year. So reserve beginning of the year, 5 lakh plus 1 lakh, 6 lakh rupees are at the beginning of the year, including additional reserve. So additional reserve are there in the beginning and also additional reserve at the end, because last sentence it is given that additional reserve 1 lakh should be maintained. So difference 622,500 minus 6 lakh 22,500 outer column, deduct it from net premium. Then 10 lakh 22,500 is the premium earned. I have taken 10 lakh 22,500 premium earned. So give more concentration on this first schedule only, because it is very, very important. Normally students will commit the mistake here. Now, profit on sale of investment, just now I told. Interest, dividend, gross, just now I told the total 10,98,500 is the A, revenue. Now expenditure. Claims incurred here. Second schedule, claims incurred. Claims paid including legal expenses. Legal expenses are 30,000 given in the bracket, that will be added to claims paid. So 6,40,000 are the claims paid given and 30,000 rupees are the legal expenses regarding claims. Add up 6,70,000. Add outstanding claim at the end of the year minus outstanding claim at the beginning of the year, 6,95,000. From this we deduct claims covered under reinsurance or reinsurance recoveries. Both mean same. Both the wordings mean same. We can call it as reinsurance recoveries or we can call it as claims covered under reinsurance. Both mean same. Deduct it. Deduct that one. 20,000. So 6,75,000 is the claims incurred. Second schedule. Third schedule, commission. No adjustment, nothing. Directly commission paid 1,52,000. Whatever is given in the problem. Expenses of operating expenses. Expenses of management. Actually 2,80,000 is given. Out of 2,80,000, 30,000 rupees are legal claims. Legal expenses regarding claims. So we have deducted. We have deducted 30,000 and this 30,000 are added here. In claims it is added. Expenses of management it is deducted. So 2,50,000 rupees is the operating expense. Now take the total 10,77,000. So 10,98,500 minus 10,77,000. 21,500 is the operating profit. That's it. So two main problems we have completed on general insurance. Come on, now we'll start the next problem. Problem number 3. From the following information, prepare a revenue account of fire insurance company for the year ended 31st March 2004. So we are required to prepare fire revenue account for the year ended 31st March 2004. Now, rupees in thousands, fire fund. Fire fund means the reserve for unexpired risk. Simply name has been changed. Fire fund. Don't get confused. Fire fund means it's the reserve for unexpired risk at the beginning of the year. 31st March 2003 means last year closing. Last year closing will become current year's opening. So beginning of the year, the reserve for unexpired risk is 6 lakh. Premium received first schedule 4,50,000. Premium due but not received. Premium due but not received means premium outstanding. Outstanding premium is 30,000. This will be added. Outstanding premium will be added. Premium paid for reinsurance, this will be deducted. Reinsurance premium paid will be deducted. Then interest, dividend and rent gross. That means no schedule. Directly we will take interest, dividend and rent gross 70,000. Next, income tax deducted therefrom. It will not come in revenue account. This income tax is a TDS, tax deducted at source. That will be taken in schedule number 12 in the balance sheet, current assets. So right now we are not making balance sheet, we are making only a revenue account. So this TDS on interest income, ignore. Then profit on sale of investment, this will take it. Profit on sale of investment, 7,000. Sundry income, this is also other income, will take sundry income 2,000. Next, claims paid during the year, schedule number 2, claims incurred. Then commission on reinsurance accepted. See here, there are two types of commission. Commission on reinsurance accepted and commission on reinsurance ceded. So remember one point, rule of thumb. Commission paid, to commission paid, add commission on reinsurance accepted and deduct commission on reinsurance ceded. So these two terms you remember. Accepted will be added, ceded will be deducted. Already in short problems also I have explained this point. So we will take commission paid. To this commission paid, add commission on reinsurance accepted minus commission on reinsurance ceded. Now here, commission on reinsurance accepted, add, put a plus sign. Then claims outstanding on 1/4/2003, claims outstanding on 31st March 2004. That means beginning of the year outstanding, end of the year outstanding. The outstanding claim at the end of the year will be added. Outstanding claim at the beginning of the year will be deducted as usual. Every problem we are doing. Claims covered under reinsurance. This will be deducted from claims. This will be deducted from claims. Expenses of management, schedule number 4, operating expenses. Rent prepaid for office building. Rent prepaid means paid in advance. So it's a prepaid, it's a current asset. It will be taken in the balance sheet. Now revenue account, it will not come. Assuming that this prepaid rent already adjusted in expense of management. Now there is no need. Directly we have to take prepaid rent in schedule number 12 in the balance sheet. But right now we are not making balance sheet. So prepaid rent will not come in revenue account. Loss on sale of office machines. This will be taken. This will be taken. Loss on sale of office machine. This will be taken in operating expenses. Commission to agents. Schedule number 3. Commission to agents. Schedule number 3. Keep a reserve for unexpired risk equal to 50% of the premium and additional reserve of 80,000. So at the end of the year, we have to keep a reserve 50% of net premium plus additional reserve 80,000. That's all. I have explained you all the points. Now I am coming to the solution. The revenue account of fire insurance company for the year ended, particulars, schedule number, amount, premium earned. The premium received 4,50,000. Add outstanding premium 30,000 minus premium paid for reinsurance 10,000. So net premium is 4,70,000. Now adjustment for unexpired risk. So we are adding here. Previous last two problems we have deducted. So when we have to deduct, when we have to add, remember now. If the closing reserve is more than opening, if the closing reserve is more than opening, we deduct. If the closing reserve is less, than opening, then we have to add. The first time we are coming across a problem where opening, beginning of the year it is 6 lakh. Beginning of the year, the reserve for unexpired risk is 6 lakh. End of the year, 50% of 4,70,000, it is 2,35,000. Plus additional reserve, it is asking you to make 80,000. So 80,000 additional reserve. So total end of the year 3,15,000. So what is the new point here? Beginning of the year reserve was 6 lakh. End of the year, the reserve has come down to 3,15,000. The difference will be added. That is the new point, very important point. Remember, the difference between these two is 2,85,000. This 2,85,000 should be added, should not be deducted, because closing reserve is less. One point. Because end of the year reserve is less. That's why the difference will be added. So 470 plus 285, 7,55,000 premium earned. Here I have taken premium. Then profit on sale of investment, sundry income, interest, dividend, the total I have taken. Claims incurred, schedule number 2. Claims paid 3,80,000, add outstanding claim end of the year, minus outstanding claim beginning of the year, minus claims covered under reinsurance. Just now I told you, I have explained you in the problem. Claims incurred 3,66,000. Schedule number 3, commission. Commission paid 42,000, add commission on reinsurance accepted. In our problem, in the current problem, commission on reinsurance ceded is not given, not there. So we have only commission on reinsurance accepted, and accepted should be added. 45,000. Take 45,000 here. Operating expenses, expense of management and loss on sale of office machines. Take 86,000. That's all. Take the total of B, 4,97,000. Now deduct A minus B, 3,37,000 is the operating profit. A minus B. That's all. So this is the end of problem number 3. Now I am reading out problem number 4. From the following particulars as at 31st March 2004 in the books of the General Insurance Company Limited, prepare revenue account in respect of fire insurance business. Again we have to make the revenue account of fire business. Now claims paid, schedule number 2. Claims outstanding on 1st April 2003, beginning of the year outstanding, minus. This is the opening, beginning of the year outstanding claim, minus, put a minus sign. Claims intimated and accepted, but not paid on 31st March 2004, end of the year outstanding. This will be added. So added 70,000, and outstanding claim at the end of the year 70,000, outstanding claim at the beginning of the year 40,000. So add 70,000 minus 40,000. Expenses of management, 4th schedule, operating expenses. Provision for unexpired risk on 1st April 2003, beginning of the year. Reserve for unexpired risk, beginning of the year 4 lakh. And additional provision for unexpired risk, beginning of the year 20,000. The total reserve, including additional reserve, is 4 lakh plus 20,000. 4,20,000 is the total reserve for unexpired risk at the beginning of the year. Medical expenses regarding claims. So this medical expenses will be added to claims paid because it is given regarding claims. Similarly, loss on sale of motor car, schedule number 4, operating expenses. Legal expenses regarding claims, again it will be added to claims. Then rent of staff quarters deducted from salaries. This is an income. That means quarters are made by this insurance company and let out these quarters to the employees. So rent recovered from staff quarters. So it is an income, other income. It will be taken here. Rent of quarters, 2,500, other income. Then premium received, schedule number 1. Reinsurance premium paid, deducted. Reinsurance premium will be deducted from premium. Commission, schedule number 3. Commission paid. Next, commission on reinsurance ceded, commission on reinsurance accepted. Just now in the previous problem I have elaborated. Commission paid, to commission paid add commission on reinsurance accepted and deduct commission on reinsurance ceded. Then reinsurance recoveries of claims, that means claims covered under reinsurance, deduct, minus from claims. Advertising, 4th schedule, operating expenses. Refund of double taxation. Refund of double taxation is treated as a income, other income. So it should be taken under other income, refund of double taxation. Next one is interest and dividend. This is income from investment. Here income from investment, interest, dividend, etc. 8,000. Income tax deducted thereon, that is TDS on interest income. This TDS on interest income, that will go to balance sheet, 12th schedule. We are not making balance sheet, so ignore this item. Then profit on sale of investment, it is income from investment. profit on sale of investment. Depreciation on furniture, schedule number 4, operating expenses. You are required to provide a reserve of 50% of net premium for unexpired risk and additional reserve for 1% of net premium in addition to opening balance of additional reserve. Opening balance of additional reserve was 20,000. So end of the year, at the end of the year, we have to make reserve for unexpired risk 50% of net premium plus 1% of net premium plus 20,000. Beginning of the year 20,000 was there, same 20,000 we have to carry. Apart from that, 50% statutory reserve and 1% additional reserve at the end of the year. That is the problem. Finished. Now see here. General Insurance Company revenue account for the year ended 31st March. Particulars, schedule number, amount. Premium earned. See carefully. Here, schedules forming part of financial statement. Schedule number 1, premium earned. Premium received is given 12,12,000 in the problem. From this premium received, deduct reinsurance premium that is given in the problem, deducted. Net premium we got. In this net premium, we have to adjust for reserve for unexpired risk. Change in the reserve for unexpired risk. Now, end of the year. At the end of the year, 50% statutorily. So 50% of 10,92,000. 50% of 10,92,000, 5,46,000. Plus 1% of net premium. So 1% of 10,92,000, 10,920. 1% of 10,92,000, remove 2 zeros, 10,920. Here I have taken 10,920, 1% of net premium. Plus, beginning of the year additional reserve 20,000, same 20,000 it is asking you to carry. So same 20,000. So add up 5,46,000 plus 10,920 plus 20,000, 5,76,920 is the closing reserve at the end of the year. From that we deduct the opening reserve. Beginning of the year 4 lakh rupees main reserve and 20,000 rupees additional reserve at the beginning of the year. So take the total 4,20,000. Deduct. End of the year we are having more. Previous problem, end of the year we were having less. That's why we have added here. Now end of the year it is more. End of the year the reserve is more. So we have to deduct. What we have to do? Deduct. So deduct 5,76,920 minus 420, 1,56,920 outer column. And this 1,56,920 should be deducted from net premium. 10,92 minus this one, 9,35,080. This is the premium earned. So here I have taken 9,35,080 premium earned. Then interest, dividend and rent. Just now I told you no schedule, profit on sale of investment, rent of quarters, refund of double taxation. The total of income we got 9,53,480 total of income. Now claims incurred, schedule number 2, claims incurred. Claims paid including expenses 4,89,000. In this 4,89,000, claims paid plus legal expenses regarding claims plus medical expenses regarding claims. These three things are added, we got 4,89,000. Including expenses. Expenses means legal expense and medical expense regarding claims. Minus claims covered under reinsurance deducted. Add outstanding claim end of the year minus outstanding claim beginning of the year. So claims incurred will be 5,11,000. Now third schedule, commission. Commission paid 2 lakh rupees. To this we have to add commission on reinsurance accepted and deduct commission on reinsurance ceded. Commission on reinsurance accepted, add. Commission on reinsurance ceded, deduct. We'll get 1,96,000. Last one, operating expenses. Now operating expenses are expense of management 3,02,000. Loss on sale of car, advertising, depreciation. Add up 3,24,600. That's all. We have taken all the schedules. Take the total 10,31,600. Now revenue is 9,53,480. Expenditure is 10,31,600. So 9,53,480 minus 10,31,600, you will get 78,120 negative minus, that means loss. There is no operating profit. There is operating loss. So minus 78,120 you are getting, that's all. So this is the end of problem number 4. So 5 short problems and 4 main problems. I have explained you each and every point on general insurance. Hope you are satisfied with my lecture. If you are satisfied, if you think that these lectures, these videos are increasing your knowledge, increasing your confidence, then give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the videos and enhance the knowledge. And give your comments on these videos. And lastly, don't forget to subscribe my channel. The next problem I'll continue in the next video.